guys? It's BGFX. I'm coming back to y'all with a brand new video. I hope you guys are all doing good. Currently, it is 8:04 a.m. It is Wednesday morning. We didn't get any sleep yet, man. We stayed up through London session looking for a couple of trade opportunities. So far this week, I really didn't enter any trades. This last week has been pretty slow, including last week as well. We entered a trade. We took longs on GJ. We hit all targets. We hit both take profits, cashed out on that trade. But we only took one trade last week, and this week I really haven't had the opportunity to enter anything yet. And don't get me wrong, I've seen a couple of things that caught my attention, but luck just hasn't been on my side. But the main thing here is learning to not get this sense of the market owing you something, because I want to enter a trade. I haven't been entering as many trades, but I can't force it. I can't rush it. I have to let these setups come to me. And over time, throughout the last few years of trading, I've noticed as each year goes by, I began to get more selective with the trades I take. And I understand that sometimes waiting for the perfect opportunity is better. And I made a quote, I posted something on my Instagram. I said, you got to think, before you take a trade, you got to ask yourself. And I didn't originate this quote. I remember reading it somewhere. Before you take a trade, you got to ask yourself, if I can only take 10 trades this year, would this be one of them? And that's the mindset you got to have for each one of them, and really focus on the quality over the quantity, right? This is a long-term game, and approaching the markets, got to treat it like a business, man. Got to treat it like a business. But I don't want to talk too much, man. A little bit off topic right now. Let me go ahead and walk y'all through this setup. So this is the first setup I'm going to walk y'all through. This is the second setup I'm going to walk y'all through. This actually occurred last night. And this is back to what I was saying about the market being pretty slow for me, especially the last couple of weeks. Look at this entry. Literally missed our entry by half a pip, and then we pushed up 35 plus pips. And then the last setup is actually something that happened. When was it? Beginning of August. And this is a pretty clean setup. So I went ahead and rewinded the charts, and I'm going to walk you guys through that as well. And then I have the alert run, VIP trade alerts. I'm going to hop on here and kind of walk you guys through what I was seeing as well. So let's go ahead and go back right here. Here was the longs, right? So let's go ahead and break down this concept. We're on a 5-minute time frame right now, and we can see that for the most part, the market has really been pushing to the upside. So if we go back here, you see we had a major impulse, pull back, another major impulse, making new highs, and we spiked up into 142 on the 142 psychological whole number, psychological zone, whatever you want to call it. Then we really rejected, and we began to go into a contraction or a consolidation, whatever you want to call it. The market didn't really have a major direction around this point, so the market began to consolidate for a good 7.5 hours, maybe a little bit more. And then throughout this time frame, we've seen major wicks coming to the downside. We've seen a lot of choppy movement. Not really much of a directional move, and then we did see a push to the upside. So recently I noticed you guys are enjoying the institutional concepts that I've been posting recently, so I want to go ahead and drop some more value. I think you guys are really going to enjoy this video, because I have some special concepts here for you guys. So basically, this is what you could call your contraction, right? From this strategy standpoint, you could call this your contraction. And basically, in contraction, we really have no directional movement. Now, what we have happen next is we do see a breakout to the upside. You always want to think in terms of liquidity and who is playing in the markets that you are looking to get in. Okay, you need to know your opponents. You're looking to enter in the markets. You're looking to enter. You have to know who else is in this with you. What approach are they taking, and how can you think in terms of the best probabilities to be on your side, because that's all trading is, right? Probabilities being in your favor over the long term. So we see this push to the upside, right? So we have to think above this level. Our first type of liquidity we're going to have is going to be the stop losses of sellers. So that's going to be the first type of player in this market, and you could probably put it up here just like this, right? And I'll go ahead and type it out real quick. So seller stop losses, and we'll go ahead and drop that right here. And we see that this bullish pressure was going to hit these seller stops. Now, aside from these seller stops, we also have buy stops. Okay, a buy stop order is basically going to be right? If you were to set a buy stop at 141.69, that means if price was to push up to that key level, you would have been triggered into a long position right then and there. So basically, if you had buy stops, let's just draw it right here. If you had buy stops in this little box, which is a possibility of what was going on in this market structure, basically buy stops were triggered, and we also have our break and retest traders triggered. So we have three different forms of money either coming into the markets or coming out of it. So we have our seller stop losses hit, we have our buy stops hit, and now we also have our break and retest traders pushing capital into the market. So at this point, we do have three different types, and we need to see what happens next. So we need to ask ourselves, is this going to be a continuation of a trend, or was that just the order being induced for accumulation and liquidity being pulled out of these retail traders? So let's go ahead and see what happens here. You can see that price pushes all the way to the downside. So anyone who was looking to go long right here, you could also go ahead and take Fibonacci from here to here, and you'll know that a lot of people were also entering on the Fibonacci breakout. So below that area, we also have liquidity here. So we are going to have stop losses around this area and a lot of money actually coming out here. So when you see this breakout and that breakout really fails to sustain any type of upside movement, that's basically a fake out. Okay, that's a form of manipulation in the markets that once you understand the concept of, you could really turn your trading around. So we see that spike to the upside, right? And then you could go ahead and press it. You see that if we go ahead and bring this back real quick, you see that we do hit this form of support. Once we hit this form of support, we now know that what's happening. We are going to have buyers who are looking to push price up. Okay, people who are long bias on this. We're going to have buyers looking to push price up, and then what happens? We go ahead, we grab the liquidity of the buyers, breaking both of these previous lows, which is most likely where the stop losses of those buyers are going to be. So once again, we have more liquidity. This is retail money being grabbed. Okay, just like up here when we had seller stop losses, we go ahead and bring this down here, and now this is going to be our buyer stop losses. So let's go ahead and type that out real quick. Buyer stop losses. Go ahead and throw that right here. So once again, this is liquidity. Aside from the buyer stop losses around this area, we are also going to have sell stops, which is going to be our bearish bias traders who are looking to short the market. So if they're away, they might have limits set, and that's going to trigger them. So next thing that's going to happen is we do get price pulled back to this level, and then look at what happens next. Price pulls back to the level, so we now have people who are simply looking for a continuation to the downside on that break and retest right here. So we also have liquidity being around this level. Okay, so anyone looking to sell, we now are going to have more money residing in the market that will be up for grabs by the higher power based off how the market reacts. So keep in mind, the higher power, who we consider the market makers, the institutions, the funds, the banks, basically the big players, they aren't going to win every time, but it's very, very crucial that you understand that they most likely will be winning over the long term, because the statistic is that 90% of traders lose 90% of their money first 9 days. I'm sure you've heard it. A lot of these approaches are the same. Everyone's taking the same approach. So this manipulation allows the higher power to get over on it, because you have to think about it. When the market is faking out in both directions and triggering both type of orders, and is literally taking money away from retail traders, it's going to the higher power. Because this is what I talk about in my previous videos, when I'm telling you guys, like, if all these retail traders are stocking up on longs, then they're closing in profits, it's like, where's this money coming from? This money's coming from the institutions, because they set these orders up. They have plans, right? Retail trading is literally at an all-time high right now. And recently I've gotten more into institutional style of things. I've been diving fully into this and mixing it with my own strategy that I've developed over the years, because as time goes on, as Forex becomes more popular, as it gets more widespread, everyone is trading the same approach. These type of approaches are going to become more and more effective, and I literally seen it happen. 100%, I've seen it happen over the last few years. The way that manipulation is picked up, and the way that these methods become more and more powerful. So keep in mind, I'm gonna just dive into this kind of surface level in this video, but I'm still gonna give you guys as much value as I could. So what we see here is fake out to the upside, fake out to the downside. This move as a whole here is basically expansion. Okay, expansion of the markets, accumulating, distributing price at certain areas, and at this point, you can see that this bullish engulfing did occur right here. Then we pushed up right about on this level, and you can go ahead and press it, and you can see that boom, this seller liquidity was picked up. And then at this point, I was looking for a pullback. So once again, this is a trade I was looking at. This is a trade I was looking to call to the alert room. Unfortunately, you know, we really didn't get opportunity. So what I was looking to actually happen here, we just had to identify our swing high, and then we could have took our Fibonacci from here to here. And I was looking to enter on a 618. All right. The reason I was looking for a 618. I wanted to see a deeper pullback to this level. 618 was also in confluence with this previous support resistance level after the manipulation occurred. So something you'll see happen is a lot of retail traders enter right like in the middle of, you know, the accumulation, when really you want to wait for the fake outs to happen. That way you don't have to go with like an extremely wide stop, because your stop loss is going to be your point of invalidation. So once you already have the invalidation hit, you're aiming for price to go in your direction afterwards, if that makes sense. You see how price already pushed to the downside? If your bias is if you want price to come back up, you know, if price was to break a new low, you're basically, you know, your bias was basically proved wrong at that point. So you want to have a mitigation area, an area where you potentially close these trades, okay, based off of what is done in the past. So right here, very simple pullback, and then we push up, and then we were very close. And this is what I was saying, man, like the markets were not on my side this week. We literally missed this by like half a pip, right? Missed this by like half a pip, and then we pushed all the way up right here. A little bit of a pullback, and then boom, all the way back up to the upside. And I'll take you guys to the VIP alert room real quick. This is what I posted. This is my analysis. Was getting ready to call the alert out that I entered this trade until we didn't actually get that, you know, area touch. So this is what I was looking to happen. We had our fake outs pre-London accumulation, and instead of getting that pullback to the zone, instead we had a pullback to this little mini area, and then we literally took off on GJ. So that was a very clean setup. In terms of the outlook, you know, our directional move was right, but we didn't get a deep enough pullback. And as you can see right here, longs would have been a nice 120 pip move. All good. Let's see what sets up tonight. And then you know, we had a couple of things set up, but couldn't really find too much to enter there. But that was the first trade for this week, right? Nothing really came up. Here is the second trade. So this actually occurred last night, or really early this morning, depending on which way you're looking at it. So this trade here on GJ, GJ was pretty choppy. You know, it was pretty choppy. We had this little area here, a lot of consolidation. We pushed to the downside. We came all the way back up, kind of formed a V here. And then once again, we seen a strong move to the downside, grabbing liquidity. Let's go ahead and go up to like the 30-minute real quick. Go to reset chart, and we can go ahead and draw this area out. So what I seen here is that the strong move to the downside was basically to grab seller liquidity, right? Oh, I'm sorry, buyer liquidity. A lot of people wanted to go long there. Okay, and then you also have people right here who were looking to short, who we pushed up and grabbed those seller liquidity. The liquidity of those sellers. So once that occurred, the reason I want to go long here is because price, if you look at the candlesticks, extremely bullish candlesticks. We were very bearish for the time being on this one candle. This candle ended up pushing down about 32 pips. So keep in mind, a lot of this happens for a reason. You know, we're inducing the order, and basically, if you were to draw a trend line here and go ahead and replay the charts, you could see that, you know, price was consolidating. Overall trend was up, and then we were resting on the support. So a lot of people wanted to go long around this area here, and this major bearish candle that came down was simply a grab of the liquidity after they induced the buys in the markets. So it takes a little bit of time to get used to this, but the more you practice it, the more you train your eye. That's one of the main things here, is training your eye to understanding when this occurs and kind of understanding when you can get in, you know. So we have that candle showing major rejection around this previous level. This kind of held up as a form of support. Go ahead and bring this down, and then from that point, we're extremely bullish. We make a new high, so that was enough confirmation for me to see that that was not actual seller it wasn't actual sales that would actually hold for the long term, you know. So we come right here, come right here down to the 5-minute time frame, take out Fibonacci. Entry was going to be at the 0.5 this time. Stop loss would have been very tight, 13 pips. With the potential 51 pip reward, depending on when you exited it, and this would have been a 1 to 3.87 trade setup. And the reason the stop loss was so tight here is because we had the formation occur. We already dipped below these lows. We already grabbed the liquidity. So if we were to see another push like down to here, I would have probably just expected price to continue to the downside, right? So our whole goal here was just to kind of catch that reaction with the very low drawdown. And then if you press play, once again, super close, man. This week has just not been on my side, but hey, as long as it's break even, it's not major losses, it's part of the plan, bro. Just got to stick to it. So we missed that entry by like half a pip, I believe. Yeah, half a pip. And then from that on, we took off about 30 plus pips, and I was also looking pretty nice, but kind of missed out on the entry. So, you know, we'll get them next time for sure. All right, we are back, guys. Had to take a quick little break from the charts to get something done real quick. But yeah, we're on GJ now on a 15-minute time frame. This could be the last setup. We'll go ahead and walk y'all through. I'm gonna really dive deep into this because I really like this setup. So I want to go ahead and kind of break down a few little factors here. So yeah, we're on the 15 right now on GJ, and for the most part, we see that the market's consolidating. This actually took place in the beginning of August, and you know, we really didn't have too much of a market direction, but this was a fairly decent size range. So keep in mind, if you were to bring this little measuring tool up from this high all the way down to this low, this was like 140 plus pip range. So there was definitely a lot of movement going on here. So one thing that we could clarify is that this is a highly liquid market. This market is very liquid, which means that we have a lot of stop losses above, a lot of stop losses below. We have very active retail buying and selling going on based off of what your bias is. So we don't know which direction the market is going to go, but we do know the way that the market likes to exchange orders. So basically what we have here is going to be a sell opportunity on GJ, and I'm going to go ahead and walk you guys through the way you could have actually broke this market structure down. So me personally, I already know the market's going to be a sell, but I'm still going to walk you guys through this trade as if I was looking to go ahead and trade it live. So let's go ahead and get into it. So basically what we have here, okay, we already know it's a range, and we can see that starting here, the market made this push to the upside. It made a pullback, which is basically impulse correction, and now we are getting a bit of contraction or consolidation. So we go ahead and we could do something like this, and we see in the market overall didn't really have a direction, and now we are seeing a second push to the upside. So this is what many traders would see as a double top formation. You know, very, very simple. If we go ahead and look at this circle tool, we can go ahead and point this out and then point this out. So this tool here, combined with the fact that we are in a range with, you know, no real overall market direction, we know the overall market's trend was moving up, but we know that, you know, the market can shift very quickly, you know, especially in the Forex markets. So yeah, we can see that price is making equal highs. So this is a highly liquid zone, and above this area of price, we are going to have the money of most retail traders. So it's very possible that the market can be manipulated, right? It's going to be a manipulation play, manipulation trade I'm going to be taking you guys through. So we know it can be manipulated, and basically what we see happen here is a little bit of reaction. We are inducing the sells, and we are breaking up to a new high. Okay, we're breaking up to a new high, and we can see something like that occurring and pushing up all the way through this level. So relative to this previous high here, we see price push up about 22 pips, which is perfect to take away the stop loss of most people who are looking to sell, as well as activate some of those buy stops that are resting around that level. So basically what we have here, if we go back to this here, we had an impulse correction, contraction, another push to the upside, and instead of seeing a reaction, we seen a small level here, a small bit of reaction, then a major bullish candle grabbing the liquidity. Go ahead and throw this here, and then what we are looking for is price coming back down and breaking that previous low before seeing another pullback, right? I'm not trying to confuse y'all by throwing too much information here. Before coming back into the reversal. So basically with the market makers, institutions, whatever you want to call them, what they are doing here is we clarify it's a highly liquid zone. Most people are selling, we're inducing it, stopping them out, okay? by stopping them out and by this, you know, bearish candle coming back into this level of where most sellers were in the markets, it's telling us that this bullish pressure was not actual demand of the currency. It was more of manipulation to grab the liquidity. So being that price does push back to the downside, and I know we don't see it yet, but that's what's going to happen in a second. I'll show you guys how you can actually take place, so to take advantage of the setup. So that's what we have going on. Pretty simple concept here. So what you can do is once price makes this high, you can then work your way down to the time frame. You can see what price does. So around this area, you know, it's very probable that we have a lot of people going long, and I'll go ahead and show you guys what happens next. So we see this rejection right here. We see the rejection, and then we push back down to the lows, and we break this previous level. So this is the very important aspect of it. All right, you see how we had the bullish candle. Okay, you can go ahead and equate this one bullish candle to this entire move here, right? This entire move here would act as that bullish candle. I'm sorry, not that entire move, not that entire move. This move here would probably act as the bearish candle. This move here would act as the bullish candle, and then this move here would act as the large bearish candle, taking out the liquidity, right? See what I mean? Taking out the buyer liquidity before we see the pullback. So now once we see this and we have this confirmed that this is the type of play we have going on, we are then going to be looking for the pullback. So for the pullback, I'll be taking Fibonacci up from this high down to the low. You know, you need some type of entry confirmation. You need to adjust that a little bit. And then I'll be looking to enter right here on the 0.618. Stop loss, I would go fairly aggressive with it, because once again, we're entering on the grab of liquidity. If price does decide to make new highs, at that point, you know, it's a very high probability chance that the market can just be continuing up. So keep in mind, when we are looking for the sell right here, we are not looking for the bounce off of resistance. We are more of looking to understand the manipulation and how most retail traders got messed up here around this new high being induced, and we're looking to catch the, you know, exchange actually occurring here when price is pushing back to the downside. So if you go ahead and press play, you can see it's a very nice entry. I believe price does consolidate once it comes down a little bit, and then once it does consolidate, it ends up breaking and making brand new lows around this area. So I'll get to this in a few seconds, but you have a few options of where you actually want to target your final move. But right here, this is a 1 to 5.9 trade. You had a few different options. If you wanted to go at wider stops, you could have done that, but keep in mind you would have lowered your return based on your risk. So this is a 2.7 risk to reward. If you would have went like right here, you would have probably had like a 1 to 5. Honestly, in these circumstances, I would have recommended going with a tight stop, because you're already pushed above the structure. If you push any more above the structure, it's very probable that the market is going to continue up. So if we were to come up here on the 1 hour time frame, right, and go ahead and reset the charts, what you actually can do here is you can draw this trend line. Okay, you can draw this trend line, and let's go ahead and clear this up real quick. Get this little bullish candle off of here. All right, here we go. So yeah, you see how we drew this trend line here? We also know that there was liquidity below this trend line, and then if you draw this area out, we know that there's liquidity back at the bottom of here. So you have multiple options. You could either get out quick with this profit of the liquidity that was grabbed below the ascending trend line, or if you want to, you know, be a little more patient with it and you want to swing it, you can also do that as well, because there's many benefits to sniper swing trade. So basically, a lot of people swing trade with wide stops, 50 pip stop loss sometimes. If you really focus on the entry and you understand the concept of the market pushing in one direction and the cycles of it, you could get in with very low drawdown. And in my opinion, like, low drawdown swing trading is the most powerful method of trading, but at the same time, it takes work, right? And my personality, you know, I don't like holding trades for as long. I like to day trade, intraday trade, usually holding trades for a few hours up to a day, sometimes minutes, but it really depends. You know, the factors are always changing. But yeah, very simple concept here. Impulse correction, consolidation, pushing to the upside, slowly inducing it, breaking into a new high, accumulating buyers here, instead coming back down, pulling back, and then continuing to the downside. So that's pretty much what we had here, guys. Hope y'all did enjoy this video. As you can see, it's a very nice entry on this trade setup. Just wanted to break that down a little bit. And then once again, we have liquidity around this area. If you really wanted to go ahead and hold this for the long term, you could have held it even longer, and you can see that price would have continued to the downside. And in terms of your stop loss, once you've seen price break this low here and push to the downside, you could have mitigated risk and completely left that as a break-even trade. So it looks like my camera battery is actually getting pretty low right now, man. But as you can see, you could have targeted this level all the way down here for about 118 pips, give or take, before we begin to push back to the upside. So like I said, camera is getting pretty low. I'll catch you guys later. I hope you did get some value from this video. As usual, if you did enjoy, make sure to hit the subscribe button as well as leave a like on the video. Let's see if we can hit 100 likes, guys. I appreciate the support y'all been giving me. We've been growing insanely quick. Like I said, hope y'all enjoyed this video. It's been your boy BGFX. I'm out.